Hello, everybody. It's Wednesday, IBMTV investment show, and I would like to introduce you my guests today. It's investment genius Shaquille.
Good evening.
How are you?
Good.
And political genius Bill Trevisant. Hello, Bill. How are you today?
Hello, Sasha. Hello, Shaquille.
Hello, Bill. How are you?
Good.
Okay, we had early on IBM TV discussion and Bill, your morning report. Before we'll go into investments, they are seriously affected by the political decisions, life, and even tweets by certain people. And I would like to have your opinion, Bill, how it's all correlated.
Okay, well, as a brief update, just to bring our audience up to speed. President Trump decided and announced via tweet that he was pulling all of his negotiators out of a comprehensive COVID relief package, which both the House and the Senate have been negotiating at least since last June. And at issue was the House had an offer on the table of $2.2 trillion, and the Senate had an offer on the table of $1.5 trillion. They were approximately $700 billion apart, and still kind of working towards an agreement. When Trump unilaterally and without warning canceled the negotiations and walked away from the table, that sent a shockwave around the world. Because we are so close, we only have 26 days before the election. Our sources tell us that what occurred was that Trump had a conversation with Senate Majority Leader Mitch McConnell. And in that conversation, McConnell pointed out to Trump that there are only 26 legislative days left before the election on November 3rd, and that Trump could have one or the other. He could either have the COVID-19 relief package, the comprehensive one, which the Senate would work on, or he could have the confirmation of the Supreme Court nominee but he couldn't have both. And so Trump opted to focus the attention on the confirmation of the Supreme Court nominee. Now, as a result, that kind of instability, because everybody had been waiting and the markets had been kind of planning on, and indeed the central bank, Federal Reserve Chairman Jerome Powell, has consistently publicly stated that the economy is weak and its future is uncertain unless there was a sustained fiscal stimulus package coming from the government. That having been now not being true, it's led the markets to become uncertain. And talk about VUCA, the volatile, unknown, uncertain, chaotic world that we live in. It added to all of that. Then, as if that wasn't enough, compounding that, later on in the day, after everybody was just digesting the fact that Trump had walked away from the negotiations, killing all potential packages, Trump then, in a series of late night tweets, first signaled that he would be willing to send out a stimulus check to Americans in a separate standalone bill, then indicated that he would sign a separate standalone bill providing $23 billion to the airline industry as a separate bill, and then tweeted out that he would signing a separate bill of $135 billion for small businesses and to refund the Paycheck Protection Program. Now, at that point, on the Democratic side, led by House Speaker Nancy Pelosi, she has all along maintained that the Democrats were not going to engage in piecemeal negotiations and that it was rather a comprehensive package or it was no package at all. At the end of the day, long story short, it leaves this, that Trump has said that after he wins the election on November 3rd, he'd be willing to then go back and revisit a comprehensive package. However, the question remains, what if he's not reelected? And after November 3rd, he becomes a lame duck president. And more so, what if the Senate loses control, the Republicans lose control of the Senate after November 3rd, and then the Republican Senate becomes a lame duck Senate, at which point in time there'd be no incentive for the Democrats to negotiate over a COVID relief bill, and rather they would just wait until January 20th when they would have the presidency, the Senate, and the House. And what that means for the American economy that is on the edge is this, Sasha. October, November, December, January, with payments going out in February. That would be 5 months from now with an anemic economy and everything left up in the air and nothing being done. Now, that is the mess that they have made here in Washington. I hand it over to you, the investment professionals, to and then there's one more wrinkle, if I might, because then I'd really like to learn with our audience from both of you esteemed gentlemen, and that is this, that if it is an expected Biden win in 26 days, then obviously there's going to be a substantial change in governmental policy on taxes and a whole broad number of issues, from the environment to taxes to healthcare to everything. And that presumably would be a seismic shift that would affect the market in all kinds of ways. With that having been said, what the Congress has put in my hands, I now lay on your desk.
Thank you. Thank you so much. All I wanted to add to that I'm a strong believer that all these polls about who's going to win the election, they're quite meaningless, because obviously those in the Democratic camp, they're saying that, oh, it's all done, Biden will win the presidency. And those diehard Republicans, they believe that Trump will win it 100% or so on. What I would suggest, there is a betting site, Bet365, and they provide odds on presidential elections.
Mm-hmm.
So those who are diehard Republicans, and they are for Trump 100%, and Trump will win, I would challenge them to put some money. So I'd say, why don't you put $100,000 on Trump winning? And the odds are phenomenally good. There is for Trump 2.65. So if you put only $100,000, you'll get paid back $265,000. So not only your man will win and become another 4 years president, but you will also get paid for that, $165,000 cash. I mean, what a beauty. Now, for Biden, the situation is not so good, because for him, odds are only 1.55. So what the hell? You put $100,000 and you'll get paid only $155. So your profit only $55,000. So those who will put money for Trump, they will win 3 times as much money as those who put on Biden. So that's something interesting. Also, they provide the votes state by state. Mm-hmm. Yeah, of course, there are hard die Trump states, and so there are the several states, including, of course, New York and California. They're obviously almost 100% for Biden, but there are some states which, like battle states, like Wisconsin, all the stuff. All of them are now into Biden's camp, except 2. And I told about this 2 already. It's obviously North Carolina and Florida. According to Bet365, Florida is dead even, 183 for Democrats, 183 for Republicans. And North Carolina now slowly gravitates toward Biden. Now, the latest I've seen is 1.8 for Biden, 1.9 for Trump. Okay. Now, Shaquille, I must hear from you your observation and your thoughts.
On betting or on other things?
Betting's a question to think about. You open an account, you send your money, it's done deal. It's very easy. That's the easiest part of it.
Isn't that what you kill? You bet every day.
That's right.
Yeah.
Try and put $1 billion on Biden and Trump. That'd be brilliant. So we do actually have another type of thing called Betfair, which is a betting exchange. And their pools are showing that there was something like 180 million last time I checked that had been bet between the two candidates. So that'll be interesting to see. The Betfair odds are $3 and $1.50. And you are seeing similar things, even money in North Carolina, maybe slightly heading towards Biden, and Florida's at even money. Look, I tend to think that, we saw a big surprise last time, and I think that the market's kind of pricing in that, Trump's going to lose, because everything that you sort of hear about Trump is quite negative. And I'm not defending Trump by any means, but, Trump gets COVID, it's because of how much he hasn't taken it seriously. He hasn't been wearing his mask, this and that. So, who knows? Is he going to be in there forever? 2 days later, he's out of the hospital. And that gets a negative spin as well. So you're hearing a lot of these sort of negative things that just stack one on top of the other. And I think that there's a lot of people who just ignore it now because everything that they hear is just so negative that they stop paying attention. Mm-hmm. I think that a better place to actually have a look is to see what's happening in the markets. And so the markets, there's sort of a rule that says the majority is kind of right most of the time. Like if you look at the betting markets, the favorite horse is going to win the biggest percentage of races. The favorite horse is the one that's got the most amount of money on it. It's where the betting public actually puts their money. So you tend to see that, obviously there's even more money in the finance market. So what are the finance markets doing? What's been very interesting is to actually have a look at the difference between the 2-year yields, the 10-year yields, and the 30-year yields. This is a very popular trade. It's one that I know people wouldn't have heard of, the viewers, but basically what it is it's the idea is that if you were to lend your money, say, to the government for 2 years, you would expect to receive a lower return than, per annum, than if you were to lend the money out for 10 years. Mm-hmm. And so that creates a curve. And the steepness of that curve can actually indicate how much the market is expecting the stock market to do and the overall economy. So it's a measure of the health of the economy. Mm-hmm. Now, I think it was 2 months ago, you actually saw I think the highest recorded net short positions on the 10-year note futures contracts. It was around 210,000 short positions. What that means is that people are expecting 10-year yields to rise. And so the market has been expecting what they call a steepening to occur, where the yield curve between the 2 and 10s and the 10s and 30s actually increases. What we actually saw is Goldman Sachs come out over the last week or so and have actually started betting against that happening. Mm-hmm. That's a pretty substantial thing because that heavily prices in that Biden's going to win by Goldman Sachs analysis. So, Goldman Sachs, I don't think that they really are going to allow their preference for who they think should win influence how they're going to trade the markets. Having said that, Goldman Sachs might be releasing that because they think, hey, let's get everyone to think that the market's going to go the other way and then we can offload our positions. Who knows? But I think it is quite telling that you are beginning to see a lot more volatility in the market. Bill, you mentioned before about the COVID-19 mm-hmm. package. And sorry, that's my trading system going off. The relief package. I can't do anything about this. I'll be back. 2 secs.
Okay, sounds like you're in trouble, Shaq. I'm just messing.
I'm never in trouble.
I know. Yeah, Sasha. The interesting thing about this COVID stuff with the president is that he went into the hospital almost, it seems like, against his will. He was given oxygen and stuff on Friday. And then he was given a series of experimental treatments. First of all, a cocktail of sort that's still experimental, and then another drug treatment that was also very experimental through IV, and then he was given supplemental oxygen, and then he was pumped full of steroids. And then as a result of those, he then made his made-for-television return to the White House stage, getting off taking off from the hospital at exactly at 6 o'clock when the world news organizations went on with their nightly news. And coincidentally, it was exactly a half an hour plane ride or 25-minute plane ride from the hospital to the White House lawn. And then it was 5 minutes up the steps, so that at the end of the major news networks that had to cover him, that was him taking off his mask, saluting, and going inside. Now, I guess the question is, and I know you and I briefly discussed it, but I'd like to hear more from you, because I think the audience and the investors ought to know that Trump, while he says that he feels 100%, anybody would, because he's been pumped full and still is on steroids. Sasha and
Yes.
Steele, I hope that's what you wanted me to get to while you were away.
Well,
Well, let Sasha go first, because Sasha, there's the issue of the steroids and whether or not this recovery is a mirage, and or what's going to happen if he comes off the drugs, because essentially he's on drugs, right, Sasha?
well, I heard yesterday Dr. Gupta on CNN. He's a neurosurgeon as well, as we know, and he's described this. His part of his medication are steroids. That's true. Now, what he told me about, not me, but worldwide audience, of course, including me, he told that the steroids they have certain properties that affect your mood swings and the way of thinking, and they going from euphoria, and the patient goes to depression in basically in a matter of minutes sometimes. And so therefore certain decisions what the president is doing right now, obviously under steroids, it probably would be advisable for him to wait until at least, you cannot interrupt steroids and just cancel them altogether. You have to decrease doses and slowly it will go down to zero, and then hopefully you're normal again, and so on. So in this situation where he is now, I don't think he's even capable of making any decisions, especially such important decisions as this bill, this package for Americans, and many other things. So or at least if he cannot be isolated, which would be the best thing for everybody, if he would at least listen to his advisors, and he has some capable people around him. But as we know, this president will not listen to anybody. He will not be advised by anybody. And that creates, in fact, a situation where probably Republicans could probably call the medical concilium to make him sort of incapable, and just to try to maybe get Pence or somebody else to write until this dosages of steroids will be subsided, and he would be in a position to continue his decision-making process, because right now we might be under influences of a person who is simply incapable from a medical point of view to carry on the functions.
Well, you're alluding to the cabinet or the vice president invoking the 25th Amendment, temporarily removing authority from Trump. And I can tell you with certainty that is not going to happen. So I'd rather listen to Shaquille tell us how the market is going to cope with a man on drugs.
Well, it's already been volatile in the market, so I don't think this is going to make much of a difference. It's just going to remain volatile. Look, the thing is, I think that this close to an election, the focus really has to be more on what the likely outcome is. And at the end of the day, there is only really two outcomes, which is the Democrats win or the Republicans win. Like, that's it. Like, there's no other.
Or there will be a contested election, and it will go on in courts, and it will go on for several months. That's also outcome.
Sure, but ultimately, there's only going to be those two outcomes. Right? It can be protracted, yes. There could be a challenge or a fight. And I think the market doesn't like that idea very much. The idea that you could end up in a position where you're getting into January and that's still not clear. I mean, the market didn't like it when that happened with Al Gore and Bush. So, I think that there is some fear about that. However, ultimately, it's going to result in one of the other party, one of the two parties winning the election. So you have to look at, okay, what are the likely economic consequences to either party winning? What are they likely to do for the markets? So just focusing on the markets, which I know is not the whole economy, but just focusing on that gives you an indication as to where you might be looking at putting your money, what are safe haven assets, that sort of stuff. One of the problems that I think is facing America right now is something I've highlighted before on previous shows, which is that everyday people can suffer. It's very hard to see that from a distance. And it's also not trying to sound sort of heartless and cruel, but it's also not something that people are concerned about outside the US. Mm-hmm. You can't expect somebody in Britain to care that much about what's happening to the everyday person in America. They're probably going to care more about what's happening to the everyday person in Britain. So they're not looking at the overall market and thinking, oh, that's a really bad idea because the Fed putting money here is going to boost the market, but it's going to hurt the people at the bottom. Nobody looks at that. And that's a real problem facing America because, like I've said before, it seems like what's happening at the moment is you've got the Fed pumping all this money into the market. They're not just pumping it in by printing more money, but they're also pumping in by buying assets.
That's right. That's right.
And so, the problem with that is it pushed a lot of money around the market. The market's got an enormous amount of cash, but there's nowhere to put it. There's nothing to do with it. Where do you put all this money? And very, very little of it is actually going to the everyday person. I think probably the strongest argument you could make, that I would certainly be making if I was on the Democrats' strategy team, would be to talk about essentially trickle up economics, which is if you empower all the people at the bottom and you give them more money, they're going to spend the money. They're not going to hoard it because they need to spend it to survive. Mm-hmm. And so by them buying goods and services locally, that's then going to trickle up through the rest of the economy because you're going to have supply chains, you're going to have all the employees involved in supply chains, retail shops, all of those sorts of things. But yeah, it's a very difficult situation at the moment. I tend to think that because the market is already priced in a Biden win, that if Trump does win, the market may temporarily drop, but I think the market will actually go up quite significantly because they know that he's going to, play silly buggers a little bit with the COVID package and the relief package and the taxes and all that sort of stuff.
Mm-hmm. Well, okay. Let's look at the market today. And when I say look at the markets, of course, Shaquille, I'm not looking at the credit markets or anything like this. I'm looking at something what an average person can actually make or sometimes lose some money here and there. So we are looking at the New York Stock Exchange, we're looking at NASDAQ and some similar markets, Russell 2000, for example. So what's happened, first of all, today, market already made up everything what it lost yesterday and more. Dow is now up well over 400 points. Yesterday it's lost, I think, 375. It's doing quite well. What's interesting from my own perspective, very interesting thing happened to me at the end of last week. On Thursday, I don't know, I got bored and I decided to steal some money. And in order to do that, the NVIDIA was around $540 a share. So I sold the put, 525 put, expiration next day, so I figured out it's easy, a few $100s. And okay, so I decided to do that. I've done that, and at the end of the day, it was news about Trump's health, and by Friday he was taken to the hospital, and market went drastically down, and Nvidia closed at 523. So I acquired, in fact, 100 shares of Nvidia, which makes me a proud owner of one of the best stock. And because I was paid premium for put, so which I sold, so essentially I got very good deal on the stock. And Monday, it's open up around 540. So once it's happened, I couldn't believe what's happened today. I sold, believe it or not, I sold 540 January call. Now it's a covered call, back to where we started, covered call.
Mhm.
So I sold that covered call and I got paid premium $72.
Mm.
It's absolutely incredible transaction, because now my downside, my stock cost me $525 essentially, and now I'm protected $72. I have downside protection from there, so I'm looking at 450 or so. I'm break even. However, I still have that. So anywhere stock will close in January over 540. So I keep the $72 premium plus $15 profit from 525 to 540. So in a way, what's happened to Trump benefited me financially quite a bit. So I can't complain. So, so if he wouldn't go to the hospital, I would not get shares of Nvidia. I would not solve the call.
Well, Sasha, you might keep that in mind because, at least according to the reports coming out of the White House, Trump is still in the dangerous phase, and so he might be feeling better because of the steroids and things. He is, at least medically, still walking a very fine and questionable line, at least according to the medical professionals.
Well, the medical professionals citing that it's a privately guarded information between patient and doctors. They cannot release any particularly vital and important information. So therefore, we're all in dark where he was tested negative last time, when he's got the symptoms. We don't know really much about what's happening to him. We've heard about some medicines that he's taking, and of course, they're all experimental drugs. And I don't think that any average person who will get coronavirus in the United States will get access to these drugs. Maybe very few people, if any.
Well, actually, no one.
Well, maybe he's Stephen Miller. Maybe he will get some good treatment.
You know who Stephen Miller is, do you, or no? Okay, Stephen Miller is the president's primary speechwriter, but he's also the architect of America's policy with regard to immigration.
Right.
So not only that, I think he's his main advisor, speechwriter, influencer, and many other things. It's not just a speechwriter.
Well, I mean, the border wall, the DACA, the separation of kids, the cages, I mean, all of that stuff. Anyway, he is now out of commission. Actually, and this is important for the market, and I'll just say this, and then I want to obviously turn it back over to you, Sasha, and you, Shaquille, and that is that the Trump's White House has turned into what they call a super spreader event, meaning that it's not just Trump and his wife Melania, but now it has reached through his circle and into the Pentagon, so that there are a total of about 35 to 40 people who have tested positive, and they're still trying to test other people. But that includes the entire top brass of the Pentagon, which is now quarantining. It includes all of the top officers in Trump's re-election campaign, leaving his campaign election efforts in disarray, as well as his senior advisors, including Miller, press secretary, a deputy press secretary, and a number of policy advisors. So, Sheila, Sasha, how are you guys going to deal with all this volatility?
Look, I think I just want to address what Sasha said. For those people who were watching who wondered, whether I was in trouble, I wasn't in trouble. Those were alert messages that were coming up on my trading screen. And what they were actually saying to me is the same message that they're saying, but they're trying to make sure that you actually read them, right? It's actually saying, due to the increased volatility that we expect during the election campaign, we have increased margin requirements.
Oh,
now, because of the way that I trade, I'm not too worried about that, but that's actually what it's saying. So that's the sort of thing that's going on at the moment. That the brokerage company, brokerage houses, and the prime brokers and all of those sorts of groups that actually are required to maintain their clients' accounts. They're the ones that are actually on the hook for it ultimately to the exchange, and they've got to go after you if you've lost money. They're trying to protect themselves by increasing that, and that's also why you're seeing $70 on a share price there for selling calls. It's basically because there's so much increased volatility, which is actually priced into that option. But you will see that implied volatility drop back down after the election, regardless of who wins. So to get to your question, Bill, look, I think just personally, this is just my opinion. I'm no expert on politics or anything. I think what's probably going to happen is the people that were going to vote Trump already are probably just going to hunker down. They're voting Trump and that's it. Nothing's going to change their mind. The people that were already going to vote for Biden, the same thing. I think the swing voters is the big question. It's one, the swing voters that might have been previously leaned towards Trump, are they still going to lean towards Trump, or are they going to lean towards Biden? Or given that it's not actually compulsory to vote in the US, are there going to be a whole heap of people that just don't bother to show up? And if so, then it comes down to who's got the bigger base and who's got the base spread across the most electoral colleges.
Right, Sasha.
Well, one only thing that I would notice about Trump's chances to get reelected. I've said it on one of the shows before that Trump's electorate, whatever it is, it's electrified, it's very passionate, and I could witness one very interesting thing. I'm following Gary Kasparov on, including Facebook, and he published a couple of days ago an article about what he believes that Trump should not be reelected, because all the negative things about Trump or so on. And you could see the reaction of people who are pro-Trump to Gary's article. People who are against Trump, they just generally said, a great article, thank you, Gary, something very, very polite, very neutral, considering the person who published the article, he has a lot of weight. Now, people who are pro-Trump, they were so angry, and they were saying, Gary, stick to chess. You understand nothing about the politics. Just shut up. Just very, very abrupt, very crazy things. This is what characterizes. And, I think that they are largely intimidating people who are against Trump, really by their aggressiveness, but their devotion to their leader. Actually, yesterday, I remember his advisor at one time, Scaramucci.
Mm-hmm.
He was at one time he was Trump's advisor. Now he's turned against him, and now he came up with a new terminology for people like Trump who are COVID infected. So he said that there is a new word for the people like that. Covidiot.
It's called what?
Covidiot.
COVID.
So COVID-infected idiot. So the new terminology is Covidiot, and he said it actually several times during the late show on the CNN. So very
I'm with the COVIDiot.
I think it'll be very interesting to see, like in this election campaign, I think that there's going to be a lot more attention paid. Certainly, it's the first time I've ever said it. I am looking forward to seeing the vice presidential debate.
Yes.
I was scared that actually after the first one anyway, because there wasn't really a lot of policy. I think that these two guys, look, they're younger. What's Harris is 55 or something, 56.
Yes,
and
about that, yes.
early 60s, so they're a bit younger. She's probably got a little bit more personality and kind of, a bit more sort of out there, whereas he's, a lot more sort of dry and boring to listen to. But I think they're going to have more of a policy discussion, and I think that's probably going to be the biggest thing that'll swing anything. I personally don't think that even without Trump having COVID, if they go on to have a second and third debate, I can't really see much changing. They're just going to sit there and, you're a liar. No, you're a liar. It's just going to be more of that sort of stuff. I actually watched a documentary, or sort of a quasi-documentary called The Social Dilemma on Netflix. Mm-hmm. It was actually quite a difficult thing to watch, to be honest with you. But for those people that haven't seen it, one of the things that they talked about in there was that because of the way the algorithms and the AI algorithms work on Google, on Facebook, etc., they'll actually work out what kind of thing you're into, what's going to keep you looking at their screen the longest. And then they cater the news that you see based on that. And I think what the problem with that is it means that different people are actually going to hear and see different things and a different perspective based on where they live, based on what kind of friends they have, all that sort of stuff. And that's very interesting, because I do see that could be a potential cause for why the country, but not just the United States, but other countries as well, why the population has become so polarized. Because you're seeing a set of facts, and then you're going to look at the news, and you're reading the same news, and you're thinking, well, how come the person on the other side doesn't see the same facts and interpret them the way I do? And that, I think, causes there to be a huge sort of divide. But ultimately, I think most elections get decided on the economy and on what's going to, reduce jobs, what's going to, create growth and all that sort of stuff. And I still actually think that when you take all the personality stuff out of it, when you take all of the identity politics out of it and all of that, people are going to choose Biden if they think that Biden and Harris are going to run the economy better and help them come out of the coronavirus stuff better, or they're going to pick Trump and Pence if they think that Trump-Pence is going to bring them out of this better. I think that's going to be the primary thing that is actually going to be talked about.
Shakir, I totally agree with you. And remember, many years ago, Clinton said, during his first election, he said, "It's economy, stupid."
Mm-hmm. Yeah.
And that's how he beat Bush Sr. in his first election, right? So, of course, yes, I agree. But until recently, Trump actually was doing not so bad on the economy. Yeah, it was, of course, after coronavirus and so on, but he still, even 2-3 months ago, I think he was still on his way to re-election. And just something with this package, with I don't know really how he's losing it and what exactly he should have done differently.
I do. Yes. He should have been, kinder, gentler from the beginning. Stop making fun of him,
Bill, that's like he didn't go in saying, look, I'm going to be really nasty and mean. That's my personality. I'm going to call people names. He's called Rosie O'Donnell names and all that sort of stuff. But once I become president, I'm going to be really nice and friendly and a soft little teddy bear. Do you know what I mean? That's just completely unrealistic.
Oh, no,
it's like at the moment. So I can just quickly say, it's like at the moment I hear a lot of criticism about, well, he's sat there and he's come out and told people not to be too afraid of the virus. Don't let it dominate your life and this and that. And of course, Fox spins it and goes, yeah, that's absolutely fantastic. Of course, he's going to say that he just beat death. He's in a good mood. And of course, the left media is there going, it's terrible, it's irresponsible, and all that. But what's he going to do? Come out and say, America, I'm your president. Be afraid. Be very afraid. It's awful. It's catastrophe. I don't know what's going to happen. I mean, nobody's going to say that, right? So, he's not going to be different. That's how he is.
Well, I mean,
it is what it is.
Well, that's according to him. When told that there were over 100,000 deaths and such. I think, though, that the perception is wrong. I think that what the American public thought at the time was that he was funny, and that he was different, and that he would bring a different management style. And yeah, maybe they thought that he'd bring more of the straight talk to the White House, but I don't believe that the American people ever bargained for his governing style at being so blunt and singular, almost certainly to a fault, but in the face of obvious facts. And, in hindsight, people are saying, well, you should have seen it and everybody voted for it, 'cause that's how he acted last time. Well, sometimes there's a difference between what people saw and whether or not they believed he was actually going to act like that when he became president. And I think in that regard, a majority of the people are now having buyer's remorse with Trump. And I think that's a real thing, and only insofar as we have the American voters to look at it. And that is that the polls are telling us what the American voters think right now. And the American voters think right now that they have that they may have remorse over their Trump vote. So regardless of what we can say, though, they should have known, or they this or they that, the same electorate 4 years later is now looking at the same situation, and they're coming up with a different decision. Sasha?
Well, I would like to notice two things. Is number one, his inability to build coalitions. Mm-hmm. He is so single-minded and so focused on himself that he is absolutely either doesn't understand or, well, since his business experience, he didn't care. He didn't need to build coalitions because he was running his businesses the way he wanted to. Some bankruptcies here and there, whatever. Okay, so he was
not here and there. He had 6, Sasha.
Read David. Book,
David
The Makings of Donald Trump. Yeah. It puts David Johnston put black and white everything. I don't want to repeat what he says. Now, about his style of management, every people associated with Trump so far, half of them were fired and half of them are in jail. So this is telling a lot about his management style.
Yeah, I honestly just don't. I mean, I for one did never think that that would be his management style, and I can't imagine the average American would have thought that that was it. I mean, he had a certain appeal. He was funny. He was different. He promised change. He promised American pride, and promised a strong economy. And I think for solid reasons, people followed that prescription. And it just so happens that the facts are not what those are as we stand. We have a pandemic that may or may not be exacerbated by his actions or lack thereof. We have economic uncertainty. We have social unrest.
Well, I don't think you can blame social unrest on him and the pandemic. Maybe he could have handled that better, maybe not. Who knows? But the economic uncertainty, I think, has a lot to do, again, with the pandemic. So I think it's more a question of, okay, looking into the future. Now, would we in the rest of the world prefer to see somebody who was, similarly, lowering regulations and sort of, a lot more protectionist than what I would have liked? Someone like Ronald Reagan. At least with Ronald Reagan, he would, he'd come out, he'd tell jokes, he'd make fun of himself, he was a good orator. He was just brilliant at being able to deliver, great lines and all the rest of it. So he was charming. He was charismatic. I think Trump lacks that a bit, and I think also because Trump's a business person, business people tend to take risks, calculated risks, but risks. And ultimately, hey, if I get it wrong, all right, well, we owe the banks some money, and they'll have to just fight over the skeleton that's left of the company. And he's only had one bankruptcy every decade of his adult life, Bill. It's not a big deal. But I think that when you're taking risks based on that, that's one way of thinking. But when you're actually running a country, you can't take some risks because like if you get it wrong, it could cost people their lives. It could damage the economy for generations. It can, do all of those sorts of things. And that, of course, is going to be a problem. And it still leaves, I think, a lot of Americans still worried about, okay, healthcare is really expensive. Can we do this better? They tried Obamacare. It didn't quite work, I think, the way that people were hoping. But, can we get healthcare done better? Can we rebuild our infrastructure in the United States? Something that comes as a great surprise to, for example, Australians, when we actually go to America and see the condition of roads and bridges and things like that. We're like, oh, this is a bit of a problem. So those are the things that I think are going to affect people. And I think that the political party that puts up the most convincing argument, not the one that's actually going to do it because it's politics, but the one that puts up the most convincing argument that they're going to do it, the one that can persuade the most amount of people that this time it'll be different and they're really going to do it, I think that'll be the party that'll end up winning.
I have just one thing to ask, because I appreciate your sage insight, saying that essentially when you're governing, it's different than when you're playing with your own house money. Trump walked away from a $2.2 trillion much needed fiscal stabilization policy and has said, too bad, to the economy of the United States of America. That is what he has said.
What about people?
That's right. That is the stock market. That's small business. That's big business. That's the international market. That's foreign governments. That is not the sign of a person that is taking it seriously. And he just did that in 24 hours.
Yeah, but to defend him, don't forget that he was on steroids, so you can't be too harsh to him, right?
I don't disagree with you, Bill, necessarily, other than to say that this is again, it's going to be politics, right? So I have no idea as yet how that's going to be spun, but I can just assume the Republicans are going to say, well, the Democrats wanted to do this and they wanted to do that, and they wouldn't, we've been trying to get this done for ages. It's the Democrats' fault. And the Democrats are going to say what you've said. Well, how much does Trump care about the people? He just walked away. Again, it's just politics. And the sad thing about it, really, is that it affects people's lives. And I don't want to turn this into a political show, but, I think that even around the world, do we need to have sort of this opposition style of politics where one party stands for one thing and another party stands for the other, and they, over here we've actually got an opposition leader, what I mean? So do we need to have that, or should we start, talking about moving more towards a system where people can have differing opinions, and it's actually a group of politicians that actually are working together? There's no opposition as such because there's nothing to win. I don't know what redesign the political system would look like, but certainly, it's a bit of an issue. But I'll just say one thing about the economy insofar as the Fed's influence on it. The Fed is often criticized for not really being reportable to government. This is probably a good time for the Fed to jump up and say, this is specifically the reason why we're not influenced by government. Because the way that the Fed is going to influence the money supply and also influence the markets and the bond yields and all of that sort of thing runs independent from what the government does. And so there is some glimmer of hope there. Anybody who's thinking, oh my God, it's going to be doom and gloom if Biden wins, or oh my God, it's going to be doom and gloom if Trump wins, either way, you still actually do have that separate agency that is able to manage, and whose sole task is actually to manage the highs, the peaks and the troughs off the market and off the fiscal and the monetary system. So, hey, maybe having the Fed separate from government's a good thing.
Listen, I have one question, especially Bill, to you, because obviously as American and being in Washington, you understand these political makings of this story with this package. What I don't understand is that Trump, being a populist, he is 100%, why he wouldn't go for the Democratic proposal of 2.3 trillions and say, no, it's not enough, go for 2.5, go for 3 trillions, because being populist and being all the bases covered, everybody's satisfied, and before election, he needs as much support as needed. So he was the one, he should have going for a bigger package. So why he was opposing even the package that was proposed by Democrats?
Well,
What's purpose?
okay, it's a function of everybody hedging their bets, and what I mean by everybody in this case, it's the Republicans who are up for re-election in the Senate who are hedging their bets. There are about 10 Republican senators that are up for re-election. They have to go back to their states. Their states are very conservative, and the traditional touchstone for Republicans has been fiscal austerity and fiscal responsibility. And so they are often the ones against spending a great deal of money on big government. So when Trump comes in and says, I need this lifeline from the Republicans, and the Republicans are like, I have to go home and get reelected. And I can't go back to them as a stand-in supporting FDR, Franklin Delano Roosevelt's kinds of expansionary policies. I have to go and say I stood against big government. I stood for the rights of individual states. I stood for, against all those Democrats trying to take over everything. They were just not going to vote for what Trump needed.
Bill, I would agree with the theory 100%, except two things. Number one, that it's a coronavirus, the environment when so much money was already lost by economy and where so much new debt was created. So it's approaching now $30 trillion. So 1 trillion here or there doesn't really mean much. And number two is that it's really needed, especially when it's only a few days, 20 some days left before election. So everything what you described is normal if it would have been 5 months ago, 10 months ago, 2 years ago. But right now, today, at this very moment, I think it's incredible that what's happening right now, especially when they don't have agreement in place, and never mind governments or so on. There are people who are suffering. There are tens of millions of people who cannot put bread on the table, who are being evicted or soon to be evicted. They cannot pay mortgages or rents and so on. So this is really very, very bad timing, bad judgment, I think. And I think it will backfire on Republicans who are seeking re-election.
Well, can I just say there though that a lot of it's not like this proposal just came up last week and he just walked away from it. This has been going on for quite some time. And some of the things that are in there, he can't really vote for. Like, he just can't do it because it goes directly against everything that he was talking about. So, for example, I haven't read the whole thing, but I've heard things like, he wants to provide healthcare the Democrats have put into their proposal that there will be healthcare funded for undocumented people. So, the way the Republicans are going, they're illegal. They shouldn't be here in the first place. Our taxpayers shouldn't have to pay for it. Now, I won't get into whether that's morally right or wrong, but that's what the Republicans have been standing for all this time. That's what he talked about with building the wall prior to the election in 2016. So, clearly he's not going to support something like that. And I think that the Democrats probably have put certain things in there knowing it's going to roll up the Republicans. And the Republicans have probably put some things into their policy that knowing it's going to, or haven't put things in knowing it's going to upset the Democrats. And the whole thing has become about politics. And, I think that politicians on both sides of the political aisle, in other countries as well, but we're talking about the US for the moment, they really do a massive disservice. I don't care whether I think the everyday person, if you went to the everyday person in America, they don't care whether it's a Democrat or a Republican. Just fix it. My kids aren't going to school. I don't have enough money. My internet's going to get cut off, so I can't even homeschool them. And people are really struggling. And you've got politicians arguing and fighting for the sake of political power. And that's just such a shame to see, many countries around the world to be so beholden to the political process.
No, actually, Sasha, your point was well taken and is excellently made. And Shaquille, the idea or the framework for a solution and the frustration is also on time and well put. I guess the question is then, that at least for the leaders, which side decides to give first? Because if both sides were gaming the system, and you're right, the Democrats actually began with a $3.5 trillion proposal back in June, and they were the first ones to come down $1 trillion. for $1.3 trillion to $2.2 trillion. And the Republicans started with $500 billion and then came up to $1.5 trillion. And so then the question becomes, in this, which comes first, the chicken or the egg? Which side comes first? Which side blinks? Or there is no rhyme or reason to it, except that what we do know is the parties were at the table. And yesterday, Trump took his people out and said he was walking away from the negotiations. Maybe we could have had a deal. Maybe the sides were working towards, and he could have had a deal within the next couple of days. But we won't know that now, because it is very clear that Donald Trump walked away from negotiations in a very public way, because he was sending a political message. So all we have to go on is that one side walked away. But on everything else, Sasha, you are right. And Shaquille, you are right. And the American people are right as well in looking for some sort of resolution. But we remain entangled.
Look, insofar as the markets are concerned, as I said, I think that's why we have got so much volatility in the markets. And I don't, you talked about, Sasha, before, the idea that there may not be a clear result. I think that's why, even post the election, if the market's pricing in that there could be some lack of clarity for a period of time, but ultimately it'll result in one side or the other winning. I've said this before, Bill, I really actually hope that it's a landslide one side or the other. Right. Because this has to stop. There needs to be some clarity as to which way America wants to go. And this if it's really close and it's contentious and it's not clear and it has to be decided by the Supreme Court or something like that, that just means it's going to be another 4 years before another election. Doesn't matter who ends up winning it by the Supreme Court, but it's going to be another 4 years of there being this kind of everyone ripping themselves apart, and that can't continue. It's just tearing away. Young people today, people who are teenagers today, who are getting into adulthood, they must just look at the world and just think, my goodness, what am I going to do here? And we can't have that. We have to do something. As far as the market's concerned, as I said, there's that volatility is being priced in. We also know that the markets themselves are at extremely high points, but so too are gold, so too are bonds. That can't stay like that forever. Something has to give.
There has to be a resolution.
Mm-hmm. Yeah, you can't have all three things going up and at record highs. Bonds, for example, can't go up any higher because it would turn interest rates negative. Something's going to give. Gold prices have to come down for the market to keep going up. You can't just have everything going up at the same time. It just doesn't make sense. It's a very irrational.
Shaquille, you know what? I generally, you are absolutely right. But as you mentioned before yourselves, there is an environment where we have so much money in the markets and there is no place to go. So they're going into stocks, into bonds, into gold, and everywhere else. And they will keep going higher and higher, although it doesn't make any sense what's happening right now. But if you figure out that there is influx of money and all the pension funds and so there is influx of every week they're getting hundreds of millions, if not billions of dollars, and they have to do something with this money. What can you do? Put it in a mattress? Probably not. So
what you would ordinarily expect, though, right, is if the US is doing so badly, right, in its handling of the coronavirus and all the rest of it, I don't quite believe those numbers, but in any case, let's just say that that's correct. As most people are saying, yeah, America's doing really, really terribly, 25% of the global deaths, et cetera, et cetera. Mm-hmm. And it's a huge increase in the amount of money sloshing around in the United States. Mm-hmm. Why wouldn't those pension funds and those investors be taking American dollars and investing them into overseas markets that are doing better, like the UK or Australia or whatever?
Actually, the reason they wouldn't do it is for the same reason that they would not be, that they're cautious right now. Because the health of the world economy and each individual bloc, like the EU or now the UK or, the Pan-Asian and the Pacific, the overall health is all inextricably intertwined with the health of the American economy. And to the extent that the American economy is fragile and the future is uncertain, because they have a heightened responsibility, because they are pension funds, they can't willy-nilly go and invest in foreign markets because of the potential ripple effect. They have to be sure that the American economy is not going to send a ripple which will turn into a tsunami by the time it cuts across the pond and hits the UK and then hits Europe, such that their investments over there get wiped out. So everybody, and it's not just the pension funds, it's your major tech companies. They are all hoarding cash and sitting on the sidelines, waiting to see how all of this is going to resolve itself, if at all. Which is why your notion and your idea that this has to be resolved in a significant way by the American people, indeed is a clarion call and an understanding for what has to happen. That is a clear direction being set by the American people in this election. And you're right, the danger is if it's uncontested or it's in any way, shape, or form cloudy or gray, then we may see the continued existence of this malaise continue. But in the meantime, everybody is cautious, and I wouldn't blame them.
If I could just quickly say there, one of the things that you would ordinarily see, though, is that the markets, that big pension fund managers and hedge fund managers and things like that, they will look at betting one economy versus another economy, or one sector of the market versus another. So that's what I was getting at. And I think that the idea that you've got the stock market at record highs at the same time as you've got gold at record highs, at the same time as you've got bond yields at record lows and bond prices at record highs, and all those sorts of things, they can't carry on like that forever. And so eventually they can keep going for a while, but eventually money has to leave one sector and then go to the other. What do you think, Councillor, who's joined us?
Well, I had to join because I was listening backstage and I heard my favorite word, pensions. Yeah. And since my company, we advise on about 300 companies' pension plans around the United States, about 500 million in assets. Not as big as what you do, Shaquille, but respectfully, it's not small either. Yeah, it's not small either. But the thing is, let me tell you what the problem is, though, in pension funds. And you can Google this. General Motors de-risking, purchasing 29 billion in annuities from Prudential.
Right.
Okay. Here's the problem. In pensions, we have these tax penalties for overfunding and underfunding, and they're draconian. It goes back to regulation. You're limited there's a penalty of 10 to 100% of the amount of underfunding. So if you lose money in a plan, you get hit with these draconian penalties, 100% of the amount of underfunding. That's a big penalty. And I've had some of our clients get hit with that in 2008 when the market receded. If you make too much money, you're overfunded, you get hit with another penalty. It's called an overfunding penalty under 4971A of the code. It's 50% of the reversion. I've had clients get hit with that, then invested in Apple stock. Hence, you're pushed into these what they call stable value, which are really fixed equity index annuities, which we use in almost all of our plans. Then we qualify them under a section called 412E3. Mm-hmm. But here's the problem. It limits the investments. The only place I can really park those funds are in insurance company annuities that are A-rated or better by Standard & Poor's. So water everywhere, 500 million, but nothing to drink for outside investments. It has to go, and this is just by regulation, to these insurance companies who actually hold custody of the assets. So the pension funds in the United States are not going to look for huge opportunities to make money or invest or frankly do anything except sit on their pile of cash, which is what they've been doing for years in very I hate to say it, boring investment. So like I say, what I do for a living is very boring. It's not exciting at all. All you're doing is parking money into basically certificate deposits issued by an insurance company. So what will save that? It's the mutual fund industry. 401k profit sharing plans do not have that rule. So the Vanguards, the BlackRocks, the Goldman Sachs, and all their crazy funds can go into the equity markets with no problems, the 401k profit sharing plans. The problem that I get is the fearless leader over here is very volatile, which creates what? A volatile market, and so I don't know how you do it, Shaquille. I mean, I don't know how you invest when you're sitting with volatility.
That's the whole reason why I left Australia. So we've got our equivalent of what you call pension funds or 401k accounts, are superannuation funds that are professionally managed. And this is one of the reasons I left, because I would sit there and talk to fund managers who would say to me, I've got a real problem. I made too much money. Or, I've got to make sure I don't make too much. But when you say that to people outside the industry, they're like, what? And I've actually met people who are fund managers who've actually said to me, I have to lose X amount of dollars, before the end of this quarter. Because if they make too much money, there's either a penalty or the accountant will say you took too much risk, you were overweight or whatever. And that's the shame of it. So you're right in what you say. And I think a lot of the funds will try to enter into feeder funds to get into funds like mine that are global macro. Right. I mean, the whole point of being a global macro absolute return fund is you can't go back to your client base and say something dramatic happened and I lost money because of it. The only couple of things I could use as an excuse would be a default by a clearinghouse, or a default to one of my counterparties defaulting on an over-the-counter transaction with a bank through the ISTA facilities. Those are really the only couple of things, and even there, I'm required to have some backup plans. You don't have one ISTA counterparty; you have multiple ones. Mm-hmm. So that's the reason I'm located in Singapore and in Switzerland, because I've got the ability to transact the way that I want to transact.
Right. And to me, that like I said, it makes perfect sense, because working in the pension area now for 20 years, we have a lot of restrictions and also custody issues. We don't custody any of the assets because if we custody the assets, then of course we have a more extreme liability in terms of bonding. But the restrictions on the investments and the rules and regulations, I don't think people really understand that happened. And so like the last couple of years, 65 billion in annuities were purchased by the U.S. Pension big companies to de-risk it. Now, here's the reason why for the rule. If you study, well, this is stupid. You're overfunded. You get a big tax, 50%. Why did they do that? Because what companies were doing years ago before the rule existed, they would make a lot of money in their pensions. Watch this, tax deductible, revert it back to their companies, pay it to the dividends to their shareholders, and the shareholders got out with huge windfalls on pensions. So what they did to stop it, they created this overfunding rule, 50%, they call it a reversion tax, of anything that's above the amount that you target for to be in the pension. So there was actually a logical reason for the rule. Unfortunately, just like any logical reason for the rule, it has some adverse effects out there. Now, the other pushback we're getting in the pensions is the insurance companies themselves, because we talk to the home offices all the time, and they're small companies. They're from 75 billion to 500 billion. Since we work with them on a daily basis, here's their problem. For them to make a profit, they have to take the funds and go through NAIC guidelines, National Association of Insurance Commissioner, invest in corporate bonds, U.S. treasuries, and fixed instruments, and allocate according to NAIC guidelines. What's happening to U.S. treasuries? Way down, okay? So they're trying to make a 1% spread. Now, their goal is, can we make 1% on this money? How do you make 1% when treasuries are paying 1%, and you have to pay out to the participants of the plan? You see the problem? They're squeezed.
This is where, when I talk about the yield curve and interest rate derivative trading, this is where they become such a problem, because one of the ways that you'd extract yield is that you short sell the 10-year note, but you fund it by having bought the 2 years, right? Sorry, the other way around. So what you're actually doing is you're paying out the interest on the 2 years, you're receiving the interest on the 10 years, and you're actually taking the differential, the difference between them, and then you roll them out all the time.
Yeah.
The problem with that is that at the moment, and several times last year before all this happened, the yield looked like it was going to invert, and did invert briefly. So every place that pension fund managers who do have the restrictions that I'm fortunate enough not to have, every place that they could possibly go to be safe is not just is it taken up, but the prices have gone up so high, yields are down so low, there is nowhere for them to go. And that's why I'm saying eventually something has to give.
Yeah,
because
I agree.
They're located in the Cayman Islands, which is one of the places where they go in order to set up LP structures to enable them to take on US investors and EU investors. Those funds that sit in the Caymans, the funds that sit in Switzerland, Liechtenstein, Singapore, Hong Kong, those sorts of areas, they have freedom that the US funds don't have, but they're now faced with the tailwind pressures of what the US fund managers have got. So, and that's the problem. And again, I keep saying something's going to break. And when it does, it's going to be really, really, it's going to hurt the everyday person. Dramatically.
Well, it depends. But that's why the next 25 and a half days on American time, that is Eastern, Pacific, Mountain, and Central, That's why these next 25 and a half days are going to be so important, because either it's going to be a clear decision one way or the other, or it's going to be the melees. And there's
some
so,
of the issues,
there's so much riding on it.
Some of these issues, though, Bill, I think are above and bigger than just the domestic politics of the United States. Because there's certain things, as I said before, because of the Fed being independent and because of some things that the Treasury does sort of not directly being linked to what perhaps US federal government policy is, some of these things are going to be affected by the push-pull of money around the world. And like, you talked about before about how a lot of countries, say in the Pacific, are affected by what happens in the US. Yes, that is correct, but they're also affected very similarly in what goes on in China. So when China and America are having a fight, yeah, sure, that affects everybody. But different regions of the world have different exposures to different countries.
Yes.
I mean, I personally think that there should be more trade with the US and these countries, but there's not at the moment.
Shaquille, I am quite aware of the interconnectedness of the entire world economy, but I want to point one thing out for you. Okay, first, China and the United States are in a trade war. That's one. China actually just recently came out and called the U.S., childish, and that we should take a different attitude with regard to this Cold War. Second, and more importantly, with regard to the monetary policy, the Fed just released their meeting reports from September 6th. Now, there's a division amongst the board of directors of the Federal Reserve. There's a split, but they all came down and they actually are debating this. They are actually debating, they were hoping that there was going to be a fiscal stimulus plan, meaning the COVID-19 plan that they were hoping and waiting for. They put off their decision until the next time, trying to make sure that they were willing to see inflation go up to 2%. Some were arguing that inflation could go higher than 2%. Others were saying, no, forget it. Let's force inflation down into negative, which risks the deflationary cycle. However, they were wondering whether or not they needed to pump another $1.7 trillion into the economy. They were holding off on that. They did not take that vote. This just came out of their most recent Fed reports, the September Fed Board Minute meeting. Now, they held off on it in September only because they wanted to wait to see what Congress was going to do. Now that Congress is not acting, the Federal Reserve, obviously independent, obviously hanging on and controlling the monetary policy, is poised to step in where Congress did not on fiscal policy. And the end result of that is going to be what all of the Laffer curve, Arthur Laffer's economic theory, and all the supply siders ever wanted, which is going to be, you're going to see a flood of liquidity coming out of the Federal Reserve in the United States, the central bank. Now, once that happens, you then have to ask, what is the effect going to be when it cascades first over to the United Kingdom, and then over to EU, and then by extension over to the Pan-Asian countries, and while the U.S. is still fighting with China. So when you say to me that, well, some things are bigger than American politics, right now, the world economy is not bigger than American politics, because right now, American politics has the American economy on edge. And when the American economy is on the precipice of a cliff, then the rest of the world economy cannot move. And so, for better or worse, maybe it's some person down in Florida, maybe it's some person in central Pennsylvania, maybe it's somebody in Minnesota, or say Wisconsin or Michigan. Some person that just like you, they just want to see their way out of this. They want their kids to go to school. They want to get their job back. They want the post office to open up. They want to be able to go to the movie. Those people are going to decide. And if they decide on Trump, we're going to have 4 more years of chaos and economic instability. If they decide on Biden, we're looking at higher taxes, and then we're looking at a sustained fiscal stimulus program. But either way, we are looking at for the foreseeable future, I would say a floodgate. Now, I'm personally from the Western New York region of New York, and I would say that the federal monetary, the central bank, that is Jerome Powell in the United States, is ready to open up Niagara Falls in order to stave off what this economy is on right now. And that's how serious it is.
But Bill, how are they going to actually do it? See, there's one thing that, their fiscal policy versus the monetary policy, one thing that the Federal Reserve can do in terms of buying paper from banks, allowing them to lend more, but they don't have the power of the federal government who can actually print money, which they do, and distribute money, which they showed they could do in the trillions of dollars, and then check it up to the debt account. So the Federal Reserve, I think, has a lot more limiting moves on the chessboard than the federal government. The U.S. government, they showed they can issue checks and flood the economy with money, where the Federal Reserve, I can buy loans back from banks and give them more liquidity. But then does that mean the banks are going to turn around and lend the money to the individuals?
No, you're absolutely right, Nick. But what all that'll do, and this is something that David K. Johnson raised a couple of episodes ago, and that is to say that will simply forever demonstrate that supply side economics has its limits, because if the Federal Reserve fills the economy with all of the liquidity it can in the form of Niagara Falls, and banks don't take that money and circulate or invest that in the economy,
the problem.
Which we've already seen they are not doing, Sasha, as you pointed out.
Of course not.
The sidelines, Nick, you pointed out, because
we're sitting on the sidelines. Are you kidding me? I mean, the thing is, I know Shaquille jumps right into the mud pool and plays, but there's a lot of money sitting on the sideline because we don't want to play in this.
You're right.
This cesspool.
Yeah, but just on that, even I've wound down a lot of exposure that I have in the markets. I talk a lot about value and stuff like that. Yeah. Because I still have to make a return, but I'm not going to take the same sorts of risks that I would ordinarily take. So I'm dramatically dialing back what I'm doing in certain areas, right? But look, just Bill, if I can just quickly say that the thing is that with international investors is they do exactly what I talk about. They'll look at two different countries and say, which economy do I think is going to do the best? That sort of thing. And so what you see is money flowing in and out of economies. We saw this in the UK years ago. The UK was the anchor to a carry trade, where the UK was paying about 5.5%, while the Japanese yen was paying like 20 basis points. When that carry trade unwound, like $3.5 trillion or something, went out of the UK in like 2 days. Do you know what I mean? So you actually see huge rivers of money moving in and out of places, and that's what I was saying. Just quickly, Nick, you said that the federal government can print money. Well, not really, because they do it all through treasury operations, and the Fed counters what the treasury does. So what I think is going to be more pressing issues when it comes to the money creation system is things like the Fed recently removed the currency amount. So normally US banks can only loan out 9 times their reserves, and they've actually reduced their reserve levels to 0. So they're trying to pump money out in every direction they can. But the thing is, very little of it is actually, very little of it's going down to the everyday person, as far as I can see from here. But 2, very little of it is actually resulting in increased economic activity in the US. Businesses aren't picking up as a result of this extra money, which I believe leaves the potential. I'm not saying it's going to happen because I don't have a crystal ball, but it leaves the potential that some investors and some groups of people that have access to that US money may look at getting yield from elsewhere.
Right. Yeah. And the thing is, the real problem is that even if they had the money, how do you jumpstart an economy? And let's just go in some of our what I call systemic problems, like airline industry. They're thinking about putting 25 billion. It's a political game, but even if you put 25 billion in loans or grants to the airline industries, they're still not going to be flying the planes. In other words, all you did is kick the can down the road. And frankly, in my opinion, if you did that, you're going to have to do another 25 billion. We're not going to be flying again until that vaccine comes out in May, June, July. So in reality, and you know what our friend in Omaha did? What's his name? Warren. He dumped all his airline stocks. I don't know if you know that. He bailed out. Boom. I'm out. He did that the minute this thing hit.
When I was in California it was earlier this year. It feels like another lifetime ago. But you had that problem where you had all of those oil tankers, basically stuck in the ocean of California, and oil prices briefly turned negative, which means that you would get paid to buy the oil out of the pipelines. Ridiculous things.
That's what I'm saying. There's over the next several months, there are what I call systemic problems that you're not going to be able to solve by fiscal and monetary policy. Our restaurant industry, the restaurant industry here is dead, basically. And unless you're doing drive-ins, which Chick-fil-A is doing a great job doing, just a lot of drive-in business, but basically your overall small restaurant industry, dead as a doornail. Hotel industry, dying but not completely dead. Believe it or not, people still go to the hotels. I've checked that out, but it's dying. Airline industry basically dead. I mean, it's going to be on life support for the next 6 to 8 months, seriously. And no matter how much money, and I know the CEO at Southwest, he goes, well, I'm going to try to keep my people and keep paying them. Hey, look, you know, the horse is dead, buddy. I mean, the thing is, you can do what you like, but you're gonna have to bury that bloody horse for a while.
Like
that's the reality of it. What?
It's just like the movie theater CEO said when he.
Oh, the movies are dead. We do on Tuesday. We do the celebrities, and I brought the bad news to some of our friends, and their responses. They don't want me on the air anymore. I'm going, okay, I'll stay away. But the thing is, it was the truth. You know, I like to be positive, but the truth is, you can't make bloody movies anymore right now. It'll all change in May, June, July. I mean, this will all turn around, but we are so bloody impatient. Now, I went to law school, and you went to, Bill. It's a 3-year sentence, right? Okay, so you did your 3 years, and so you just have to kind of like suck it up. It's going to take me 3 years to get a law degree. I got to sit in this prison cell for 3 years and study the law, and you just get kind of used to that long term. It's going to take a while to get that.
You're
right. So you know, but we're impatient. We want everything now. Ain't going to happen now, buddy. It's 8 months from now.
For the record, counselor, you went back and did another year, a bonus year.
I did because I'm glutton for punishment.
I don't know what that says about you. But
I needed 4 years.
Nick, I heard a professor say that if you think it's hard getting into law school, try getting out of law school. That's something that I heard.
You can't. It's Shaquille. It's a life sentence. Yeah. But I actually went for 4 years because there was another degree on top of a law degree called a master's in law. I got to have that one, so I grabbed that. And then what I found out, and a lot of people don't know that, there's another degree on top of that called an SJD, Search Juris Doctorate. One of my friends, who I'll try to get on, Bill, went and got the SJD, but it's not offered by a lot of schools. Yeah. It's a 3-year PhD in law, which means you need 3 years of law school, 1 year in an LLM, 4, that's what he did, then 3 more years as an SJD. I am not kidding. Well, actually, he went to Tulane. Tulane actually has a SJD program. Well, that I couldn't stomach. I heard
Tulane was party school anyway. But listen, Nick, I was actually thinking about going and getting my my LLM in antitrust, but that'll be a conversation for you and I offline.
Oh, that would be good. Since the one thing we do know in all this coronavirus, the big Apple, Google, Facebook, Microsoft, anybody who's involved in tech, and frankly pharmacy too, but we're not going to mention. Do you see the pharmacy stocks? They went off like a bloody rocket. They've all done well because this doesn't affect them. And big pharma, man, every day in the Wall Street Journal, some big pharma is buying another pharma company. I mean, they're like expanding because they're loaded. And the tech sectors, they didn't hurt either. But
no, right. Go ahead, tell them, Nick.
Oh, the attorneys did well with mergers and acquisitions, by the way.
But
okay, but the thing is, the ones that didn't do well are actually, your mom and pop Dunbar shops out there that aren't listed on the New York Stock Exchange or NASDAQ. Because the restaurant industry, a lot of them are small businesses. They're not listed on the New York Stock Exchange or NASDAQ. They're going under. They're dying. Yeah.
And Nick. The report that Congress has been working on for 7 months, they issued yesterday regarding the big 4 tech companies.
Yeah.
The Justice Department is now drawing up new laws, new antitrust laws, and Congress has called for breaking up all 4 of them.
No. And no and yes. Okay. The thing is, remember, Microsoft and IBM both went through major antitrust lawsuits years ago, and not too long ago, to the point where it really kind of stuck to the Microsofties to get hit with an antitrust, and the emails that Bill Gates was putting, we're going to destroy the competition, surfaced on deposition. Okay, and that precipitated, I think I'm going to retire and start a foundation.
That is exactly
true. It's true. He goes, I'm out, right? And IBM went through the same thing. It was like a 10-year drag out lawsuit with the government. And so the thing is, there's no question, as these companies are trillion-dollar companies, that you're going to see that take place. They're going to be moved more toward antitrust. And we're talking about economies like the United States. Always joke, it's the world's largest economy, 23 trillion in assets. I mean, in GDP. China's not far behind, like 21 trillion. But then the next guy, who's way down there, it's like India it's like Japan. It's only like 8 trillion. There's a big gap. Yeah, you can see if we can do a share screen. There's a big gap between the U.S. and China economy and the third place economy. I mean, it is huge. And then
Yeah, go ahead. Sorry, make your point, and then I just had it.
Oh, well, I'm just saying it says the eagle and the dragon roar is where the economies of the world go. It'll be the eagle and the dragon, which is the U.S.
I have a question about this, if you do.
22, China at 15, and then it's Japan at 5.
Okay,
So-
give me those stats again, Shaquille.
This is a little bit out of date though, but yeah, the US is at 22, China's at 15, Japan's at 5, Germany's at 4. And then it just
Yeah, that is a little out of date because China moved up, but see the gap: 23, 15, then 5. I mean, it's a big difference.
Nick,
Yeah.
I would like to ask you a question. When you're talking about U.S. economy, whether it's 22 trillion or 23 trillion, whatever
Right.
it might be,
Yeah.
does it include the revenue from Microsoft, Apple, NVIDIA, Google,
Not-
Facebook, or it's not?
Not the
Only the domestic product that exists on those particular companies. In other words, what's generated here in the United States relating to those companies. But if you go to every individual state here, Sasha, every one of these states, because I did check them, have unique selling propositions and economies that are hard to replicate. And I'm going like, wow, this is big here. And I go to another state. Boy, this is one of the biggest. And I go another state. And California, as much as I diss them, because I don't live there and for a lot of different reasons, is the 4th largest economy in the world. I mean, just one of our states. It's bigger than bloody United Kingdom, even though Ben gets on and touts the Great Britain. It ain't as great as even one of our states of California. Our economies here are absolutely bloody huge. The only rival we have right now is China, and then everybody else is way down there. So when Bill, who runs American politics, okay, starts touting the politics in America will make a big difference in the world, he's right. Because as the eagle flies is where the rest of the world is going to fly. We will spend more on our stimulus package than Australia will make total the whole country's GDP. It's just a line item budget. You know,
Tell me one thing. With GDP being as great as 22 or 23 trillion dollars, the national debt of US is approaching 30 trillion dollars. So how is a country which has such a large GDP can afford to accumulate a debt which is now approaching 1.2, 120% of GDP?
Yeah. The debt and the GDP range run about the same right now, and this is the first time because of our current administration that debt to GDP will actually exceed 100%. For years, it's been just below 100%, and the rationale was, well, all the other countries have debt to GDP of about 100%. That was the rationale. Now, what you're saying, Sasha, very important. As the GDP increases above the national debt increases above the GDP, is the United States going to have some financial issues, which we've seen strap Italy, Greece, and Spain in the EU. And that I don't really know about. It cannot be a good sign. But
the issue that I'll say about that, though, is that for those other countries, they can get bailouts from the IMF. Right. It's really hard for the IMF to bail out the US when the IMF is predominantly funded by the US. And
but the real question is, do we even need a bailout? We actually have enough money that we could actually reduce that substantially. Yeah, Bill.
No. We got to put the brakes on this because we've got to put it in context. When you cite the example of excessive debt versus GDP, yeah, that's true as a general proposition. But the numbers that those countries were running, they were at like 120 and 150% debt. So 50% debt over total GDP. So it was GDP plus 50%. And so where we're at now, which is where it's a scary area for the United States, but we're still in that area where we're even, or maybe 5 or 10% in. So the real question is, at this point, because we are in this situation, how much more debt versus GDP we can afford without falling into the trap that Greece and the other countries have fallen into.
It's a political question.
It's a political question. Also, it's an economic question, because remember, the real problem was the interest on the debt. In other words, we were not looking to ever pay it off. We were just going to pay the interest on the debt. Now, as interest rates go down, the interest on the debt is less. So the whole theory of driving down interest rates to near zero works for our federal government, because then when we pay back the loan, we're paying it back with no interest, or we're holding the debt with no interest. So let's imagine, for example, they have 30 trillion in debt, Sasha, but the interest payment is zero. Who cares?
Negative interest rate, Nick.
No negative interest rate. I'm not sure how that works.
I think that's what they're doing. They're thinking about driving it down to negative interest. Now, we'd have other effects on the economy, like deflationary. I mean, we run into all of that deflationary cycle. But what if they ran it in, which changes the entire paradigm? So that's
you would destroy the US in a way that they couldn't recover. Let me tell you why. Let me tell you why. Because one of the things that makes the US so attractive, and one of the things that keeps the US as the world's reserve currency, is that they have never done it. They're flirting with it now by increasing the rate of inflation. Okay. But there are only really a few countries that aren't doing it. Now, Europe's got this problem. Like, if you have a look at the economy of the European Union, it is about the same as the United States. Okay. It has a similar amount of economic activity. It has similar issues. The ECB, the European Central Bank, obviously has effects all through the European Union. Now, they are not as liked by international people because of the fact that their interest is actually negative. At least in the case of the United States, it's theoretically positive, but in reality, it's negative because of inflation. Now, if you were to actually turn your interest rate negative, I would say that would jeopardize the US's ability to.
And we had this conversation with the Honorable David Walker. Bill, you may want to talk to Sasha and bring him on the show. He was actually the Comptroller General of the United States, and he also was with our friends at the Federal Reserve, and Doug Tillett, the Vice President, who I would bring on the show, the Vice President of the Federal Reserve, except he retired. So I got to go find another Federal Reserve guy I know, okay, and bring him on the show. The problem, because we discussed this with him, because remember, there's different things you can do with the debt. One thing you can do is you could actually repudiate the debt. Okay. Well, what happens when you do that to foreign countries? They go crazy. Right. Yeah. But here's the other reality. Most of our debt is not held by foreign countries. It's actually held by us. So, the debt isn't like, hey, China bought our debt, Great Britain. Yeah, they have a certain amount, but the vast majority of the debt is actually held by institutions of the United States holding debt paper to the United States. Now, that's a weird thing, but that's exactly what's going on. In other words, we issue these treasury bills, and who buys it? Social Security Administration buys it, or a federal agency purchases it. It's weird.
If you try to cancel domestically held debt, that's essentially like having a bail-in, which has caused people not to trust the banking sector in Cyprus. So I think that the US would do anything like that. I just don't think anybody would allow it.
We actually did something very similar to that. For those who are familiar with the Legal Tender Act of 1862, I'm sure Bill picked it up in his college classes law school, because there's a whole series of Supreme Court cases on it. This is back prior to the Civil War, when the United States needed to get their hands on money. And so what they did under the Legal Tender Act, 1862, they actually issued treasury notes, those dollar bills you see with the little red stickers on them. And they flooded the market with 400 million. They printed money. Okay. And for a while, people were saying, I don't want those dollar bills. I want the ones that are green. And I'm serious. This is true story. I want the greenbacks. I don't want the little red stickers on them. And they went to the Supreme Court, and the Supreme Court says you got to accept the red stickers. Now, a $1 bill back then was worth $1. Today, they retired all of it. It took them all the way till 1976 to retire all those. The federal government kept buying back those notes. But some private individuals bought them. Today, if you bought one of those notes, they're worth over $4,000, a $1 note, because they appreciate it as collector's items. So there's another out here that people don't know historically, is to institute the Legal Tender Act to basically pay off the debt. Okay. Unfortunately, by printing money.
So
and then invest.
I can't help myself. My inner voice wants to.
You like the legal tender cases. There's another historical antidote about that.
I did, but Nick, it just occurred to me that what you were arguing for, and I can't believe our conversation has come to this. You were essentially suggesting that the United States, in order to get out of this, can retire our own debt, but wait 20 years or so many years and sell it off as souvenirs and make.
Yeah, I'm dead serious. I mean, the thing is, you could actually, it's a collector's item. You could actually, you could retire the debt by selling it off as souvenirs 20 years.
Someone bring up one house economic bill.
Finally, we got to the point on which we all agree 100%.
Okay, but there's another little story behind it. The guy who was the Secretary of Treasury back then, Salmon Chase, behind it.
That's exactly.
Okay, pushed the notes out there and was totally behind it. Then what happened was he sat on the Supreme Court, and when the case came before the Supreme Court, he voted against it, and the only reason it was upheld was the other justices. So a lot of historians find this is really funny. The guy who was behind it was Secretary of Treasury during the Lincoln administration, gets appointed years later after Lincoln's assassinated, sits on the Supreme Court, and he changes his mind. He thinks it's a bad idea.
He was on steroids at that time.
Yeah, right. That's true, Sasha.
Listen, I would like to thank all of you for great comments, insights. It was a great show. I'm going to watch it one or maybe even two more times. And in the meantime, I have to say goodbye to everybody. And we'll see you all next Wednesday at 1 o'clock. Thank you so much. IBM TV investment show on Wednesday at 1 o'clock. Bye-bye.
Bye-bye.